Diane Lin is fund manager at Pengana Capital, and she joins us now from Sydney. Diane, thanks for joining us. Okay, well, we've seen this wonderful run-up in the first quarter. Many people are suggesting at the moment that it's run out of steam and making further gains is going to be rather difficult. What's your view?
I think the market is over-concerned about the slowdown in China. So we had this very sharp correction last month, particularly in the Chinese stocks. But we think we should actually focus a bit more on the long-term structural changes, which is actually very encouraging. If you look at all the policy announcements recently, how much the government is focusing on reforming the financial sector. And this is very, very encouraging, because for us, without the reform in the financial sector, I don't think we can talk about growth driven by consumption or the service industry.
What sort of reform are you talking about, and is there the appetite for it?
The appetite for reform, you mean? I think if you look at the A market poor performance, in our view, actually is because the domestic investors didn't believe the government could change the structure. They're very concerned without structural change, China would not have a future. However, the recent announcement from the government, in our view, could potentially allow the local investors become a little bit more optimistic about the future. So we think A market actually could become very interesting in the coming months. And on top of that, as yesterday from the speech by Mr. Wen Jiabao, basically highlighting that they should start to look into the projects again. So that there is a suggestion that the project construction might start soon. So altogether, we think this month into next month, we could see some good level for to re-enter the Chinese stocks.
Right. Well, if you do want to re-enter, what do you buy? I guess that's going to be my question here. And also, what about Crédit Agricole coming out and saying that we could have a cut in interest rates or a cut in the reserve requirement any day now?
We think the RRR cut is quite likely. Interest rate cut probably a little bit too early at the moment. Definitely, if you look at the money supply growth rate, is relatively low, well below the central bank's target. So there could be a RRR cut. And when it comes to investment, we focused on companies broadly that can benefit from China's financial reform. So in the financial sector, we prefer the investment banks against the banks and the property companies. And broadly, we think the consumer and service industry will benefit because the reform will allow more capital flowing into the consumer and the service industry, typically run by SMEs, but away from the large enterprises, typically in the heavy industries. So specifically, Citic Securities has always been our favorite for China over the next 6 to 12 months. And on top of that, actually, I might like to mention the electronic products, also interesting, because this month they just launched the consumer promotion month. So apparently the government is looking to put April every year as the consumer promotion month. So you will see a lot of campaign discounts going on. So it's a very interesting time in China now, actually.
Very quickly, what do you actually stay away from? And of course, all this could really be knocked off its stride if we get again another round of concerns of European debt contagion, etc.
In the region as a whole, we avoid companies that purely rely on liquidity for growth and purely rely on liquidity for performance. So broadly, we would avoid the material sector, which has been our structural view for a long time, and the commodity resources related industries. We would prefer IT over the traditional cyclical sector like cement or steel. Shipping, they're very attractive. Some of the shipping companies in Japan are attractive. They can benefit from the currency weakness, maybe worth considering. But definitely shipping in outside Japan, we think it's you need to wait a longer term. So those are the sectors we would not like to participate, particularly Chinese cement and Chinese construction machinery industries.
Diane, thank you so much for your time.